Hi, this is Bennett Tchaikovsky, and welcome to Intangible Assets. My disclaimer and copyright notice, the information and opinions in this presentation are those of the author only and not the authors, employers, or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2020 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. During this presentation, I will always also be giving references to other outside third-party uses and tools for you. Those do not belong to me. Those belong to those copyright holders. So we're going to talk about a little bit about the basics of intangible assets. Intangible assets are referring to assets that give a company certain rights but are not tangible in nature. For example, copyright gives a holder the exclusive right to use a work for a certain period of time. Another example would be David Bowie, while he was alive, sold the rights to his songs, basically the publishing rights for a certain time period. I'll go through and post that link after this presentation, but we're going to look at some other ones. So some examples of intangible assets include copyrights, patents, trademarks. These are what we really call intellectual property. And then we have other business type intangible assets, which are mainly leaseholds. We are not going to be covering the accounting for leases here, and customer lists. The last type of intangible asset is goodwill. And goodwill we're going to be looking at separately, mainly because the accounting treatment is different than other intangible assets. Investopedia, which is a great website, has a really nice link right over here that if I will post this to the bottom of my YouTube video, if you're looking for other different kind of discussions in terms of what is an intangible asset, it's a great place to go through and take a look. Okay, so going back over here, so let's talk a little bit about intellectual property and this again is not a legal discourse in terms of what intellectual property is. I am an attorney, but I have never, my expertise is certainly not in anything related to intellectual property. However, I do know that the copyright exists at the moment that the work is created. One of the other things right over here is you do not need to register your copyright. It is in fact voluntary. But right over here, you can kind of see that, also we'll post up this link as well. How do we go through and register a work? How do I register my copyright? What are those different things I can do? And that is basically through the US government. Generally, when you put the notice as I'm doing right down here, this is a great example of a copyright. If you see the footer at the bottom of my videos, you'll generally see, and also my disclaimer and copyright notice at the very beginning of this presentation, you'll kind of see how that works. So over here, patents and trademarks. What is a trademark? It is a logo or mark that distinguishes certain goods from others. A patent gives the inventor the ability to exclude others from making, selling, or using their invention for a certain period of time. Patents and trademarks, again, I will post this link up over here. If you want to go through and search the trademark database for whatever reason, it's not working on my computer today. Let's see if we can get in there real quick. And it is not working. Okay. So what's the common thing with these is that they are literally, they're not necessarily that they're invisible, but they're not really tangible in nature. In intellectual property or intangible assets as opposed to a car, equipment, which is a physical asset or what we call property, plant, and equipment, it's very, very different. However, intellectual property can be extremely important. Great example, when Disney acquired Lucasfilm, they did not purchase the Skywalker Ranch. What they purchased was the right to hopefully make better Star Wars television shows such as The Mandalorian, They'll keep on making shows like The Mandalorian and the Baby Yoda and everything else. It'll all be great. But when Disney acquired Lucasfilm, they acquired the rights to make future Star Wars films. They did not acquire the rights to his property that's up in Marin County. Okay. So when we're looking also to an intellectual property, any types of expenses, including research and development, incurred when we are creating that intellectual property are going to be expensed. Once we've created the intellectual property, we can then go through and capitalize those expenses. Generally, if we're defending our copyrights, so, you know, for example, George Lucas, when he owned the Star Wars franchise, if he wanted to prevent someone from making, basically creating a life-sized Han Solo, and they didn't have the rights to do so, that's something that they could go through and he could basically defend and actually capitalize those costs. However, there are very, very specific rules in terms of when R&D is capitalized. Let's just take a look really quickly at the Google income statement, or that one that's done by over here by Alphabet. So, and I will also be including this link as well in the YouTube video. So if I come down over here, Alphabet is the parent company of Google. If you notice right here on their income statement, right, they do have over here intangible assets. They also have Goodwill. But more importantly, what we're really looking at here is they have 5.2 billion in terms of research and development. So this is a really big, or 6.5 billion for the 3 months ended September 30th, 2019. For the 9 months ended, it was only almost 18.7 billion. So Google or Alphabet continues to pour money back into their research and development. So when we're going through and when we are acquiring intellectual property, and it's generally, you're going to see this over here more than likely if we were to go through and take a look at Google's financial statements. And if we were to go up here, you will see that Google has, in fact, intellectual property. Basically, we call it right over here, intangible assets. And more than likely, this was acquired from third parties. When we go over here to look at this right over here. So when we acquire intellectual property, so if I'm Google and say if I go out and I purchase another company, how do I go through and amortize that intellectual property? Generally, what we're going to be doing is when we acquire intellectual property, we are going to amortize it, which is just another way of saying depreciation, over the lesser of the useful life or the legal life. Let's take a look at an example. HZ on June 1st, 2019 acquires a copyright for $120,000. This is different from my classes and the example I gave them, but that has a legal life of 70 years, but a useful life of 10 years. How much amortization expense should HZ record for the year ended December 31st, 2019? Prepare the journal entry to record the amortization expense. One other thing is that generally also too is that intellectual property is amortized over a straight, basically is amortized on a straight line basis. So the way that I'm going to record the amortization expense is my total cost of my copyright divided by the lesser of the useful life or the legal life, which is here going to be 10 years. So the amount I'm going to be amortizing this copyright every year will be $12,000 per year. So how much amortization expense do I take in 2019? Well, I did not use the copyright for the full year. Why? I acquired it on June 1st. So that means that I only used it for 7 months, June, July, August, September, October, November, December. So I'm going to multiply that 12,000 by the 7/12. I'm going to get $7,000 of amortization expense in 2019. So the way I'm going to go through and record this as a journal entry is I'm going to debit amortization expense for $7,000. Then there's two different schools of thought in terms of how you can go through and do it. The first one is you can do accumulated amortization on the copyright, which is the way that I would generally suggest you do it, or you can directly credit the actual copyright. Again, I've seen it done both ways. I would probably prefer that it would be done with an accumulated amortization on the copyright. Okay, what exactly is goodwill? When an acquiring company purchases a target company, the acquirer generally disregards the book values of those assets and liabilities of the seller and determines the fair value basically of the seller's assets. So the example here I will give you is when Facebook purchased Instagram. So when Facebook acquired Instagram, I'm going to pause really quickly while I go to the specific page. So what exactly is goodwill? Well, what happens with goodwill is that we look at the company's books as a starting point, but we generally disregard those books. What we're doing is we're going to go in and do a fair value of that company's books. So we need to bring in appraisers, we need to bring in other people to say, okay, what is this company truly worth? So when you looked over here, this is an example here for Instagram. And what Facebook did when it acquired Instagram is it said right over here, what's the value of what we are acquiring? So they paid basically as a business acquisition for a total purchase price of $521 million, basically it consisting of the issuance of Class B common stock and $300 million in cash. So what Facebook went through and did is they said, okay, what's the value of Instagram's technology? What's the value of the trade name of Instagram, and what's the value of those user accounts, right? So I'm not sure if that was in fact true, but I remember seeing something like that. Then over here, liabilities assumed, we deduct that. Deferred tax liabilities, we're going to also deduct that too. And then over here, the net assets that were acquired from Instagram were $88 million. Those are dollar values that we can assign to assets after an appraiser has gone through. Now, when it comes to actually looking at what a company is paying for something versus what it's worth on the books, oftentimes that value will be much, much more. So for example, if we looked at Instagram's assets and we said that, okay, they're worth 88 million. However, had Instagram kind of create a special sauce? And the answer is yes. And that special sauce was just probably one of the better ways of sharing photos and videos basically between users. So Facebook paid a huge premium to acquire Instagram. And they also did the same thing with WhatsApp, as well as Oculus Rift. I always get that confused with Optimus Prime, but they paid in excess of the fair value. So what we're going to do is when we're going through and recording goodwill is we're going to look at the purchase price less the net fair value of the assets that are acquired. And that is going to be giving us the dollar amount that we're going to be recording of goodwill, or basically the excess of between the purchase price and the net fair value of the assets acquired. One of the important things too, as far as going through and looking at this right over here, is that we do not amortize goodwill. When I first started out in accounting in 1991, it was actually being amortized over 40 years. However, that has subsequently changed. We are going through and testing it for impairment. Does that mean we see if goodwill is on drugs or if they're drunk? No. What we do is we basically bring management is more than likely for the audit. They're going to hire a third-party appraisal firm, and they're going to go in there and they're going to see, is the value of this business still worth what we have it on the books for our goodwill for? So it's a very, very important test. If you want to look for something fun to do outside of class or outside of this lecture here, if you go through and take a look at Macy's over time, they acquired, I believe it was Bloomingdale's back in the day, and the goodwill from that transaction was about $13 billion. Since then, they have gradually have written off or written down that goodwill. They've impaired it because the value of that retail establishment doesn't carry the same value as it does today. Okay, so here's the example we have over here for goodwill. So on May 31st, 2019, ZW sold its business for $1 million to HZ. HZ acquired the assets and basically assumed all of the liabilities of ZW. The historical cost and fair values of ZW's assets are as follows. So what we need to first figure out is what is going to be the net fair value of the assets that we are acquiring. So if I come over here and take a look at this, what is the net fair value? Well, I'm going to be looking at this column here. I'm going to disregard the book value that's here. This is what's on the books. I don't care what those book values are. But here, the net fair value is going to be the sum of all of my assets, cash, accounts receivable, inventory, equipment, and the copyright. So this is my total assets, less any liabilities assumed. So right here, I'm assuming $600,000 of liabilities. So the net assets acquired are going to be $630,000. So that is my fair value. And again, if I go back over here and kind of look at what we're doing, right? So if I look over here at Facebook, right? So the first thing they do, what is the net fair value of the assets that they went through and acquired? So right over here, I've done that. What's the amount of goodwill that I record? Well, right over here, I paid $1 million. So my purchase price is $1 million. Okay, less the net assets acquired, or right over here. So the goodwill to record is going to be $370,000. So when I record this transaction, I'm going to be going through and recording basically the goodwill to $370,000. Now, if I were to be doing this for an intermediate accounting class, what I might ask you to go through and do is to actually prepare a journal entry. So what you would be doing is you would be going through here, you'd be debiting cash for 50. You'd be going through and going and recording all of these different assets here. Accounts receivable net, or just call it accounts receivable. So this is what they would put on their books when they were recording the business. That's right over here is inventory. We've got equipment. We've got copyright. And then we're also going to be recording goodwill. My goodwill amount is going to be $370,000. I'm going to be crediting accounts payable over here, basically for $600,000 because that's a liability that I'm assuming. And then I'm paying cash for this business of $1 million. Okay, so right over here, when we go through and look at this over here, I've got 1.6 million equals 1.6 million. And that's how you would actually go through and record the transaction. Practically, you would probably figure out a way to net out the cash. But again, that's something that would be worked out between the buyer and the seller for that particular property. So again, that's how we're going to go through and record that goodwill. We're going to be looking at only the fair value of those assets. So I want to thank you for watching today. Please do not forget to like and subscribe. If you have any questions, please email me at 1812CPA if you have any questions on this video, or if you want me to record anything else in the future. Have a great one, and I'll see you in the future. Take care. Bye.